The Tom Woods Show, episode 803.
Prepare to set fire to the index card of allowable opinion. Your daily dose of liberty education starts here. The Tom Woods Show.
To all my young listeners, you want to stand out from your peers? Then don't do what they do. Join Praxis, get real on-the-job experience and a real job. Be entrepreneurial. Get all the details at tomwoods.com/praxis. Hi, everybody. Tom Woods here. A lot of fun to welcome back Peter Schiff to the show. Peter has a bit of laryngitis today, but he's a good sport and joining us anyway. Peter, of course, as you know, is CEO and Chief Global Strategist of Euro-Pacific Capital. Visit them at europac.com. He also hosts the Peter Schiff Show as a podcast at schiffradio.com. I used to fill in for Peter when he had his full-blown radio show, as you folks some of you will remember, I'm sure. And he's also the author of many books, including Crash Proof, How to Profit from the Coming Economic Collapse. That came out in February 2007 and pretty much described the financial crisis to a T. So that really catapulted Peter into the spotlight. I mean, he'd always been a commentator, but that thing really, really did it. So very interesting guy, very smart guy, and I solicited some questions from the folks in my private Facebook group, the Supporting Listeners Facebook group. You can be part of that group by checking out supportinglisteners.com, and I'm happy to welcome Peter back. Peter, thanks for being here.
Thanks, Tom. Thanks for having me on again.
I know you comment very regularly, but my audience may not always get to hear you, and I am interested in your ongoing impression of Trump and his appointments.
Well, I mean, first of all, I'm one of the people that wasn't surprised that he won. I actually kind of expected it. And it really validated what I've been saying all along, which is that the economy is much weaker than the powers that be portray. I mean, that's why he was able to get so many votes from people who may have voted for Obama even twice. It's because the economy is very weak. But just electing Donald Trump president doesn't solve any of the economic problems that are the reason he was elected. In fact, he hasn't even talked about those issues yet. I mean, superficially, he's talked about less regulation, which would help. But, you know, what he's talking about doing is not addressing the underlying structural problems. And of course, he's promised to grow the government. He talks about cutting waste, fraud, and abuse, but everybody talks about that. But he does want more government spending on the military, on infrastructure. And, that's going to just blow a hole in the deficit that's already pretty wide. You know, the last time we had a Republican replacing a Democrat and we had tax cuts and more government spending was Bush 43. And the deficit sent the dollar tanking, gold and commodities soaring. And, commodities are already starting to rise. Oil prices are, $54 a barrel. Interest rates, long-term rates are at 2-year highs right now, starting to anticipate the additional inflation that will result from these policies. But I think where people are missing the boat, people expect the Fed to maybe be more tight as a result of now the fiscal stimulus. But the only way we can have the fiscal stimulus is if the Fed is looser than ever. We're going to have massive QE. In fact, when Trump ran for office, he called the stock market a big, fat, ugly bubble. Well, it's certainly bigger, fatter, and uglier now, yet he loves it now. He's taking credit for the stock market going up because now it's his bubble. He owns this bubble. It's no longer Obama's bubble. And so I think he's going to want and need Yellen to print money as fast as ever to keep this bubble from popping, on his watch and to sustain the massive deficits that are going to result from the tax cuts and the spending increases that will likely come about. As far as the cabinet appointments, some of these guys are good. I think the guy he appointed to head the Department of Labor seems like a pretty good guy. Maybe this Exxon CEO would make a good Secretary of State. But, there's a lot of guys there, a lot of Goldman Sachs alum, a lot of appointments that seem to me like they're more payback for political loyalty and people who made very, very significant donations to his campaign. But, it's probably a better cabinet than we typically get. But again, we have serious, serious problems that Trump is not going to address at all. And even if he's willing to break his campaign promises and talk about cutting entitlements, I don't think he'll find anyone in Congress who wants to do it.
You know, you mentioned Goldman Sachs. A lot of times I hear, particularly libertarians, talking about this, and they'll say, oh, more Goldman Sachs people have been appointed to the government. What do you think the problem with that is? What's so bad about Goldman Sachs? I'm just throwing you a softball over the plate here. What would be the problem with that?
Well, a lot of it is just the mindset on what these guys believe. I mean, they want to try to engineer these bubbles. I mean, we've had Goldman guys for years. I mean, look, every Secretary of the Treasury, right? We have these ex-Goldman guys. We're broke. The national debt doubled under Obama. It doubled under Bush. I mean, what kind of advice is that? I mean, if you're the Treasury Secretary, you should be saying, hey, we're broke. We got to cut spending. We got to reduce the debt. Instead, they just cheerlead more reckless borrowing because they're more concerned about keeping air in the bubble than actually any substantive changes. And so I think these guys are all cut from the same mold. And of course, they still have loyalties to their former firms. They want all their buddies to make money. And this is how they make money. And of course, they also have an idea of, well, what am I going to do after this gig is over? And they go back into the same thing, you know?
What do you think about, I know we're all told that the Fed is independent, and of course it would never, ever be influenced by politics, but there is some sense, even though, as you say, Trump has been all over the place in his position on the Fed, that they are not super comfortable with him. And in fact, I think even Janet Yellen implicitly warned him, don't repeal Dodd-Frank. I mean, I don't think Fed chairmen normally say that to sorts of thing to incoming presidents. Is there any chance, you think, that they might deliberately try to hurt him in their interest rate policy?
Well, I don't think so, because obviously they end up undermining their own credibility as well when they prick their own bubble. I think that Yellen and Trump are going to cozy up to one another. I mean, look, he cozied up to Romney, although I don't know, maybe that was just a show. But I think they're going to mend these fences because I think Janet Yellen probably wants to be renominated. After all, what else is she going to do? It's a good job. And so Trump needs her if he's going to increase government spending and cut taxes the way he's promising. He's going to need the Fed to be monetizing the debt. I mean, who else is going to buy all these treasuries? No one wants them now. The whole world is trying to get out of treasuries. That's why bond prices are falling almost every day, and we keep getting higher rates. Now, we started at a very, very low level. So even though the 10-year is still at 2.5, you're still talking about very low rates. But it started at what? 1.5. I mean, so percentage-wise, we're really moving up. Mortgage rates, I think, before Trump was elected, a 30-year fix was 3.5. Now we're almost 4.5. 4.5 is still cheap, but it's not as cheap as 3.5. But wait till inauguration, we could be at 5.5, and we could easily be at 6 or 6.5 midway through next year. That is a game changer. I mean, people are struggling to afford houses with 3.5% mortgages. How are they going to afford the same house at 6.5%? I mean, the only way is if prices crash. But then if prices crash, I mean, what does that do to the banks? I mean, they're going up now. They're not connecting these dots. But Trump is also talking about trying to refinance this national debt. He's not talking about default. He's talking about refinance, meaning as these short-term bonds mature, that we sell longer-term bonds. Well, that can add $500 billion a year easily to the current cost of interest on the national debt. Where's that money going to come from? Especially if they're cutting taxes and spending more money on infrastructure and defense. I mean, you could look at annual budget deficits coming close to $2 trillion a year. I mean, who's going to finance that other than the Fed?
Well, there is one area where you and Donald Trump have your proposed solutions are very different, but where you've both expressed some concern, and that involves the trade deficit. Now, as you well know, you talk to a lot of libertarians about the trade deficit, and they'll say there's no problem with the trade deficit. They'll say, look, I've got a huge trade deficit with the grocery store. The grocery store doesn't buy any of my stuff, and I'm doing fine. So why can't we extrapolate that to the U.S.? What's wrong with the trade deficit as you see it?
Well, because it doesn't work that way. I mean, your trade deficit with the grocer, because in theory, you're providing the grocer with money that he could use to balance his books with somebody else, right? But when you're looking at cross borders, when you're talking about countries, The trade deficit is a massive problem because we have to go into debt to finance it. If we import things that we can't pay for with exports, we have to borrow the money. And so the trade deficits are driving the current account deficits, and we have to keep paying interest to our creditors on the money we've borrowed to buy their products. But the other important part that people overlook is that our trading partners eventually want to get paid. They eventually want products in exchange for the ones that they provided us. And so we are ultimately going to have to redeem all the IOUs with real stuff, real merchandise. Well, where is it going to come from? How are we going to produce it? How are we going to make good the trillions of IOUs that are floating out there? Because our creditors haven't bothered to accept the fact that we can't. I mean, it's, they're sending us products today based on our promise to send them products tomorrow, but that promise is meaningless when we don't have the ability to actually do it. And when people realize that, they'll realize that they haven't been trading with us. They've been giving us their stuff for free. We have been giving them nothing but IOUs that can never be redeemed. Now, Trump understands the short-term problems of the trade deficit, which are the loss of higher-paying manufacturing jobs. But what he overlooks is the short-term benefit that we get the benefit of consuming those goods without having to use the resources to produce them. And so we get an artificially high standard of living. But in order to change this, then we're going to have to start living within our means again. We're going to have to start producing more than we consume, which is much more difficult. And in order to reverse this, it's not just about negotiating better or imposing tariffs. We can't produce the products that we are importing at prices that anybody can afford. That's the reality. And even to begin to replicate the production process that was destroyed over the last, generation or two, how do you do that? I mean, you have to build the factories and invest in the equipment and train the workers. And all of this doesn't happen overnight. I mean, we didn't lose our manufacturing overnight, and we're not going to get it back overnight. It's going to take a long time. And between now and then, there's a lot of short-term sacrifices that Trump has not prepared anybody for.
All right, let's switch gears a bit. I want to ask you just flat-out question from my Facebook group. This question, he recommends, he being you, 10% of your portfolio be in physical gold and silver. Does he have any generic recommendations for the other 90%? Maybe at least a low to high risk ratio and some examples of what he considers good low and high risk investments?
Yeah, well, I mean, people can invest, certainly part of their money in real estate. I mean, I think the U.S. market is still expensive, but most of the money that I advise on and that I can help people on is their stock portfolios. And I do think in general, as an investor, stocks should be a good percentage of your portfolio. I just happen to believe, as Donald Trump believed before he was president, that the stock market is a bubble, that U.S. stocks are very expensive, and they have been for a long time. This is not a new phenomenon. It's the byproduct of these bad monetary policies that have caused all these levered buybacks. I mean, U.S. companies have spent the last 10 years buying back stock, not modernizing their plant and equipment. I mean, they're more like giant hedge funds. But there are still companies in other countries, whether it's New Zealand or Singapore or Hong Kong or Switzerland or Norway. There are places where I believe that fundamentally the economies are on much sounder footing. And I believe that stock markets represents much better value to investors, meaning I can buy corporate earnings at a lower multiple and I can enjoy a higher dividend, and I can earn those dividends in currencies that I believe are going to appreciate over time rather dramatically against the dollar. So I still believe in a lot of stocks in a portfolio, and to the extent that you want to have an allocation of stocks, let me do it for you. I manage money. I do that for a living. I manage these global portfolios. I do it in separately managed accounts. I do it through my mutual funds. So for the other good portion of that 90% that's not in physical gold, then, contact one of my brokers at Euro Pacific Capital at europac.com, right? EUROPAC.com, and let me help build a portfolio for you to take advantage of the growth opportunities that I think exist overseas. And I do believe that when we do have a massive realignment in exchange rates, that you will see a big increase in the value of foreign assets. And I do believe that the relative living standards will adjust. Americans will stop living above their means, but a lot of other people will stop living beneath their means, because the rest of the world has been making our extravagant lifestyle possible. And so I want to be in a position to really benefit from that transition. But to the extent that you want to buy gold, I'm going to help you there too, right? Because I've got Schiff Gold, which, I can help you buy your physical gold and not overpay for it. But really, I want to talk about too, this new company that I'm involved with, GoldMoney, that is more than just buying gold, right? GoldMoney is potentially a game changer. I mean, this is a monetary revolution that GoldMoney is actually enabling, right? Where we can reject government money, Federal Reserve notes, fiat currency, the source of the government's power, the source of the Fed, and this whole, phony banking system is all propped up on this money. But we can reject it. We don't have to use it anymore. I mean, they're not paying us any interest. The banks are all insolvent, basically, the large banks. And so if there's no interest and you've got lots of risk in the banking system, the only thing that dollars have going for them, Federal Reserve notes, is that they're convenient to use. Well, now GoldMoney has made gold even more convenient to use than dollars deposited in a bank. I can more easily spend my gold now, thanks to GoldMoney, than I can my dollars in my bank account. And if people want to be paid in gold, whether it's a landlord who wants rent in gold or one of my employees who wants his wages in gold, I can pay that too. It's easier, it's cheaper, especially for cross borders. Now in the internet age where people are transacting with people all around the world, there's so many different currencies and they're very volatile. The one thing that's stable that unites us all is gold. And gold is valuable in Australia. It's valuable in France. It's valuable in Brazil. And if I want to trade with people, if I want to buy something or sell something to people online, they can pay me in gold instantly. It costs nothing. So this is a real revolution, right? Where we can all once again use gold as money and totally reject the fiat system. Because in the past, you couldn't do it, right? How do you lug your gold around? How do you buy a cup of coffee with your gold? Well, now you can. With GoldMoney, I can buy a cup of coffee with gold. I can buy a plasma TV with gold. I can buy a house with gold. I can buy whatever I can buy in dollars or euros. I can do it in gold. And I can make the transfers less expensively and quicker than I can using the banking system. So I would suggest that all your listeners go to goldmoney.com and just open up an account and get started. Buy yourself some gold, use your credit card. You can buy $25 worth, $50 worth, $100 worth, 1,000, whatever you want. They only charge 0.5% over spot. So it's very cheap. And they'll store up to $40,000 worth, 1,000 grams for free. So you got no storage. It's cheap to buy. They'll send you a MasterCard for free. You can use the MasterCard anywhere they accept MasterCard, and you can spend your gold as easily as you can spend your dollars. But more importantly, as more merchants sign up to accept payments directly in gold, you won't even need that MasterCard. You can pay in gold just like you use your PayPal account to pay dollars. You can pay in gold, and merchants can, start accepting payment in gold. And especially for, not just the United States, but there are a lot of countries that are having huge problems right now with their fiat currency. Currencies are collapsing overnight. The way to protect yourself is to not have those deposits. Keep your money in gold. And now not only is it safe, it's extremely liquid, right? And if you buy some gold right off the bat, they'll give you 5% bonus for free. So up to, I think, 0.5 gram. So you're ahead of the game right off the bat. And more importantly than doing it yourself, you can refer people to do it. Every time you refer somebody, they'll give you your own link that you can embed in an email or a text or a banner ad. And any of your friends that sign up, you'll get a little more free gold. You can promote it to yourself, Tom. You can have it on your website. You can get your own unique code. And as people sign up, you'll get a little free gold too for helping to spread the word and bring more people into the revolution.
Sounds good. All right, more with Peter Schiff after this message from our sponsor. If you're an entrepreneurial young person who'd rather get job experience than sit through gender studies, then Praxis may be for you. At the end of your apprenticeship, you're guaranteed a job earning at least $40,000 a year, and the average Praxis graduate earns $55,000 a year out of the program. I recently sat down with Praxis alum Diana Zitting. Diana, tell me what your Praxis experience was like.
I had weekly meetings with my advisor. We chatted about my goals, things I wanted to learn in projects, and we came up with outlined details on how to make it happen. It was very personalized. The whole team knew me by name before I even started, so it was amazing.
Diana, what I think people may not realize is you're only 18 years old. You've already finished the program, and what are you doing now?
Yeah, so I am 4 years ahead of my peers who just completed a semester of college, and I'm working as sales manager at the company that I apprenticed with while I was in Praxis. I've got tangible, measurable proof that hiring me is an investment that pays off. I know how to stick out from other applicants for positions, and I truly feel like I know how to live a freer life. On top of that, I don't have a penny of debt.
Get all the details plus some bonus goodies when you check it out through tomwoods.com/Praxis. All right, a couple more questions. Of course, I have about 1,000, but can you explain to people what a triple leveraged ETF is and what your opinion of them is?
Well, leverage means that they've borrowed money to buy whatever it is they're investing in. And so whether it's double leverage or triple leverage, it really refers to how much of the underlying asset you're controlling with a dollar. And so if you're triple leveraged, your dollar is levered 3 times so that for $1 invested, you're controlling $3 of the underlying asset, whether it's stocks or maybe precious metals, whatever it is. So the upside, of course, is, hey, if the market goes in your direction, you can make 3 times as much money, right? That's the good part. The bad part is if it goes in the other direction, you can lose, right? 3 times as much money. But the added problem is the cost of the leverage, because you have to borrow the money to buy the assets. If you're only putting up $1, but you're buying $3 worth of something, you had to borrow the other $2. And there's an interest rate associated with that loan. And so if you get into one of these leverage investments, even if the asset stays stable, you're losing because you have to pay the interest on all the money you've borrowed. So it's very, very risky. You would only want to use one of these vehicles for a short-term trade. You wouldn't want to buy it and hold it for years, because then the interest really backs up. So basically, I mean, I don't really recommend that people utilize these structures because of the inherent risk, especially if you're buying something like a levered ETF of gold stocks, because gold stocks are already massively levered to the price of gold. So, you don't need to lever it up even more with borrowed money, because in the short run, the trade could really go against you. And what you don't want to do is get in one of these vehicles, then get stopped out of it. Let's say you're trading it or you get forced out and you end up losing a lot of money. But ultimately, you're right. The asset moves in the direction that you believe, but your timing was off and you didn't have the staying power to ride it out because you borrowed too much money. So, I know that timing is always very difficult, if not impossible. So I don't want to encourage people to gamble on the outcomes that I believe are coming. Just take the money that you have to invest and invest that. You don't have to go and become a speculator by borrowing even more money to make an even bigger bet, on it, because you can end up losing.
All right, one last thing. This is also a question coming from Mike. These are all basically questions from my group. So one of these days I'll get to ask my own questions, but I want that to be a nice benefit for these good folks. I've heard, I think maybe one of the best Peter Schiff sound clips ever from my show was you talking about the insanity of the whole college funding and student debt and government loans thing. And it's a crazy, stupid policy. But I've heard the term used, a student debt bubble. Now, I can understand how a housing bubble would burst, that eventually, people can't come up with the money at these prices and things start collapsing, whatever. But how do you envision a student debt bubble actually bursting? Can you see it bursting? And what would be the circumstances? What would actually happen? What would it look like?
Well, it's not actually a student debt bubble, right? It's a college diploma bubble, right? The debt is just what finances the degree, right? We had a housing bubble. So the bubble was in the asset, the houses, not necessarily the loans, right, that propped up the bubble, although the bubble was financed by debt. And ultimately, the holders of that debt lost money. And I think the same dynamic is going on with education or college degrees. One of the things that fueled the housing bubble was that governments guaranteed mortgages. And so therefore, lenders were willing to extend credit to people who wanted to buy houses, even though the houses were obviously overpriced, and even though the borrowers probably couldn't even repay the loans because the government was on the hook to do it. That is the exact same dynamic you have in education, where student loans were guaranteed by the government, and now, in fact, the government just issues them directly. And so banks were willing to loan students unlimited amounts of money, regardless of what the actual value of the degree was or whether or not they believed the student could ever repay it, because the government was promising to do it. So nothing mattered. So because of the ability with which people could borrow money to buy houses, people started building fancier houses, with the granite countertops and all the, the Sub-Zero appliances. And we started building houses bigger and fancier, all the McMansions, because all the cheap money made it possible. And who was making money? The home builders, right? The realtors. They all made money off this bubble. The same thing is going on in education. Because kids can borrow lots of money to spend on colleges, the colleges want that money. So they start, building big gymnasiums and off-campus housing and spending extravagantly on their staffs and their administrations. And they keep increasing the price of a college degree, and people just keep borrowing the money to buy it. I mean, there's no free market restraint on this. So the colleges, the universities are enriched, just like the home builders and the realtors. They're making all this money. But meanwhile, the price of a college degree, just like the price of a house, keeps going up and up and up. So there's the bubble, because people are now paying through the nose for degrees that in reality have very little market value. I mean, what is the market value of if you major in the sociology of sports? I mean, what is the real value of some of these liberal arts degrees in the marketplace? Most people that end up with these degrees end up doing jobs that they could have done even if they dropped out of high school. They don't actually deliver any extra earning, yet you waste 5 or 6 years of your life now because the colleges are so crowded, because so many people go because of government subsidies, that you can't even get the courses. So it now takes 5 or 6 years to get a 4-year degree, and you come out and you're 50, 100,000 in debt. And what can you do? What skills do you have? You have none. And so, you end up moving back in with your parents, and you're stuck there for, eternity. But the way the bubble bursts is, the students can't repay the debt, but people start to realize that the cost of a college degree is just not worth the price that it takes to get one. And businesses start realizing that, there's a better way to screen our applicants other than whether or not they went to college. Because who cares? Everybody went to college. Doesn't mean they know anything. Doesn't mean they learned anything. So the free market will find other ways that young people can prove to potential employers that, they got something going for them. I mean, personally, I think most people today would be better off just skipping college altogether and just going into the workforce and getting real work experience and having that rather than a college degree. But this thing is, all this gigantic bubble. We have $1 trillion now plus of debt. The prices keep on rising, and you can see the results, right, where people are, struggling. I mean, go a video that I did. I don't know if you saw this video, but I did it in New Orleans a few years ago. If you just go into YouTube, Peter Schiff College, you can see where I walked around Bourbon Street interviewing all these people who worked there, who did, menial jobs that anybody could do. And I asked them, did you go to college? What did you major in? When did you graduate? How much do you owe? And everybody was a college grad, and nobody was doing work that you would go to college to do. But, the mindset has been everybody has to go to college. Just like for a while they said everybody has to own a house, right? That's the American dream. You have to own a house. Well, why can't you rent? What's wrong with renting? For a lot of people, renting made more sense. But no, everybody had to buy. That's what it's been like for college. Everybody has to go to college. Doesn't even matter if you're smart, you're dumb, even if you were a C or a D student in high school, you still need to go to college. Why? I mean, if you couldn't even get high school, why go to college? Colleges have remedial classes for reading and math. I mean, if you need remedial education in math and English, why are you wasting your time going to college? If you didn't master that in junior high school, let alone high school, but all this has benefited the educational establishment to the detriment of the students. And now they're loaded up with debt. And so that's the same dynamic. Anything the government gets involved with, anything it finances, whether it's healthcare, housing, education, it screws it up. It runs up the price and it runs down the quality, because a college degree now means nothing. It's actually, they ran up the cost of a degree, yet they destroyed its value because it means nothing. 50 years ago, if you actually went to college, A, you learned something, and B, it meant something, because not everybody had the degree. Now you learn nothing and everybody has it, right? So what's it worth, right?
Well, it's interesting that this very episode, my sponsor was Praxis, which is this group that tries to get people out of this hamster wheel and get them right into into a business position with an apprenticeship, with a guaranteed job at the end of it, so that by the time these kids are 18, 19, 20, they've been working for a couple of years, they have no debt, they have huge advantages over their peers. So people are figuring this out, not nearly as many as should be figuring it out, but there are groups like Praxis, so some people have their heads on straight.
There's a huge opportunity there for the market to step in. Unfortunately, the government is so involved in education that it crowds out a lot of the private sector opportunity, especially in K through 12. We would have a lot more private schools if we didn't have all these public schools that were financed with money that is forcibly extracted from people through tax revenue. But, if you think about the cost of a college degree, because, back, let's say 100 years ago, if, you wanted to send your kid to Harvard or Yale or one of these good top schools, you could do it. If your kid had the aptitude, you could, even if you were middle class, you could still afford it. You could scrape by. And in fact, even if the parents didn't have the money, a kid from modest means could work his way through Harvard. He could take a job over the summers and earn enough money to pay his way. He didn't have to borrow any money. And you think, why is college so expensive today? With the computer, with the internet, college should be much cheaper today than it was, 100 years ago, 50 years ago, 25 years ago. Why aren't college costs coming down? And especially with so many more people going to college, it should be that much cheaper because of the economies of scale. It's only going up because of government involvement. The same thing with healthcare. Why is healthcare so much more expensive? Now, the liberals will try to argue, well, that's because it's more complicated now. That's because we have all these complex medical procedures. We have all these drugs that didn't exist in the past. So that's why it's more expensive. But that should make it cheaper. You could make the same argument. Imagine if governments were in charge of computers, right? If they made all the computers or cell phones or something, and you would say, why is this cell phone 10 times as expensive as it was? Well, because now look at all the things that it does. The original cell phone only made a phone call. Now you've got all this applications. It's so much more complicated and powerful. That's why it's more expensive, right? That's what they would say. But the free market makes things better. It delivers more value, but it makes it cheaper. The free market would do the same thing with healthcare. It would do the same thing with education. The problem is the government won't let it.
Peter, of course, at tomwoods.com/803, I'm going to link to Europac.com, GoldMoney.com. But also, if people just want to follow your commentary, what's the website for that?
Yeah, so, I used to do the Daily Show, which you used to host so well for me when I was out of town, the Peter Schiff Show. But I just did not have the time in my schedule to continue with that daily show. And so what I do now is I do my podcasts on the same website, Schiff Radio. So you can download these things. I don't do them on any set schedule, but I usually do 1 or 2 a week, sometimes 3. I haven't done one in a while because I've been traveling, and then I was busy, and then I had this laryngitis. But I try to do them. So it's on schiffradio.com. Also, my YouTube channel, The Schiff Report. Not only do I put my podcasts up there, but I also do video blogs and other special things that I film and I put up on my YouTube channel. So make sure to subscribe to my YouTube channel. And also, follow me on Facebook. I've got a Facebook page and I've got a Twitter page. And I don't tweet as much as Donald Trump. And obviously, I don't have anywhere near the followers that he does. But, I do them once in a while. So, follow me on social media. I'm putting out a lot of stuff. And then when you go to Europac.com, just sign up for something. My weekly digest is good to sign up for. It's free, but it puts you on my mailing list. So anything I email out, if I'm going to be speaking in your town, you'll get an email that I'm going to be there. But it's good to, just get on my list. And of course, most importantly is become a client, so, talk to one of the brokers at Euro Pacific Capital, buy some physical gold, from me at Schiff Gold. And yeah, sign up. Everybody needs to get a GoldMoney account. I mean, you can get one for $5, $10. There's no excuse not to have an account, and there's no excuse not to encourage as many people as you know to have accounts too, because the more people that have accounts, the better for everybody, because we want as many merchants as possible to have accounts. We want to be able to use our gold as often as possible. And more importantly, I want people to pay me in gold, right? If you can get paid in gold, why would you want to get paid in anything else? If gold is as liquid as dollars or euros or yen, in fact, more so. I mean, if I got a buddy in Europe and I want to send him 50 euros, what's that going to cost me? I mean, maybe I don't even have the euros. I got to go buy them. What's the spread? Then I'm going to put them in an envelope and mail them. I mean, because a bank wire would be like $15. How do you pay $15 to send somebody 50? But I can send my friend in Europe 50 euros worth of gold instantly for free. And even though I use dollars to buy them, if he even wants to sell the gold, if he sells it in Europe, he gets euros, right? There's no FX. And of course, he never has to sell it because he can take that gold and send it to somebody in Japan who could turn around and send it to somebody in Peru. And because doesn't matter what currency you use, gold is gold all over the planet. So it's the perfect money for the internet. I mean, everything old is new again. Gold's been around for thousands of years, but it's never been easier to use than right now. So all the people that say, oh, the gold standard, I mean, it doesn't work anymore. It works now better than it's ever worked. People just have to adopt it.
Excellent. Well, I hope people will do that. GoldMoney.com, Europac.com, SchiffRadio.com. All this stuff will be linked at TomWoods.com/803, plus your social media. So really, it is a smorgasbord of Peter Schiff on that page. Thanks so much, Peter.
Thanks, Tom. And keep on doing all the good work you're doing.
All right, a couple of things before I let you go. Let's talk about what's coming up tomorrow. Tomorrow we're going to talk about the Depression of 1920 to 1921. We talked about that some time ago with Jim Grant, who wrote a book on it. He's a great guy, and that was a great episode. And as you may know, I've written and spoken on this subject too. And the reason it's interesting is that here you have a major economic downturn. There's basically no monetary stimulus applied. And in fact, government spending is cut instead of increased. And the result is the economy reverses itself and returns to prosperity relatively quickly. You didn't have anything prolonged like we've seen, this, for example, in the current situation where we've had this very, very unimpressive economy. Yeah, there have been jobs created, but that's because you're starting from the trough. Or the Great Depression, it just goes on year after year after year. You didn't have that, and yet you also didn't have the very kinds of government intervention we're told are necessary to correct downturns like this. So it's very interesting. Well, there's been some pushback against me and against other people who have written on the subject of 1920-21. They're trying to make all these arguments about why it doesn't actually prove what we say it does. But believe me, it does prove it. And tomorrow we're going to talk about that in detail, and I'll give you some references, and you'll be ready to go out there and do battle on this important subject. Then secondly, I do a lot of free ebooks on libertarian topics, but I've also done one on the general topic of how to monetize your website. There's your website just sitting there. Don't let it just sit there. Make it carry its own weight. Don't let it sit there earning $0 for you. Do something with it. So this is what I do. I earn all my income online, so I show you exactly what I do. But it's also a how-to book if you ever want to know how to start a podcast or how to self-publish a book or how to earn money blogging or how to do affiliate marketing on your website, starting with the Amazon program, but certainly not stopping there. All kinds of stuff are in my book, 5 Paths to an Online Income. That baby is free, and it is beautiful and detailed and wonderful. One of the best ebooks I've done, if not the best. And you can pick it up by visiting pathstoincome.com. All right, that's it. See you tomorrow.
Become a smarter libertarian in just 30 minutes a day. Visit TomWoods.com to subscribe to the show for free, and we'll see you next time.